Hi, welcome to the Market Alert for Monday the 7th of December 2015. So let's start off with this week's news. Let's have a look through, see what we've got coming out and what is likely to move the market. Tomorrow, not a lot, 3 p.m. We've got Carney speaking. Whatever he says, take no notice because he's never actually followed through on anything he's ever said. But that said, he is speaking at 3 p.m. The markets may listen to him. I don't know about the US because he has said he's not going to increase rates, and the market's focus at the moment is on Yellen, on whether she intends to raise rates or not on the 16th of December. And of course, we are getting closer to this, and certainly will be by this time next week. The 8th, Tuesday the 8th, again fairly quiet for the US as well. So what you can see here is that we could have some very boring and losing days. I'm warning you now. We've got 3 days so far where the markets could be sideways, especially after Thursday and Friday of last week where the market had a lot of momentum. So be warned. The market's waiting for Yellen's decision, so it could be fairly quiet after the first hour of trading, unless of course there is some geopolitical news that hits the market. But economic news, very quiet up until Thursday, which you can see there things start to pick up a bit. You'll also notice the absence of wheeling out any Federal Reserve member this week as well, and the same on Friday. So we've only got Wheel speaking. That's an MPC one as well. That's not a Federal Reserve. So the big guns at the Federal Reserve this week are going to be poring over the economic data from last week and making their decision for a week on Wednesday, I think it is, isn't it? The 16th, whenever the 16th is, so it's likely to be the Wednesday. So we've got a situation next week where the markets are going to be, or rather this week, where the markets could be fairly quiet up until Thursday, and that's why I am warning you at the front end of the market alert, so then you can make a decision on whether you wish to trade or just stand aside until that point. Like I've said before, the activity is going to really kick in and pick up once we get this rate decision out of the way. So sometimes trading, it's an ideal thing to have this foreknowledge and then also stand aside if you wish to do so, or use smaller bet sizes if you can't resist the temptation to get into the market. Alternatively, actually paper traded as well. So I am warning you in advance. Monday, Tuesday, Wednesday this week could be fairly quiet for the Dow. So let's have a look at Friday, see what happened during Friday session. So Friday session, this is at 1:30 p.m. Non-farm payroll figures were released into the market. And again, these are going to form a fundamental part of Yellen's decision on whether to increase or decrease interest rates. The figures came out better than forecast. And you can see the market's reaction there. Fairly quiet beforehand, and then the market just explodes as the figures are released. So let's skip ahead a bit here. There you can see how the market reacted, and there are the actual figures. Non-farm payroll to 211, up against the forecast of 201, but down on the previous month. Nonetheless, this was giving the market a pretty good indication that interest rates are likely to be increased. So let's move on. The market then decided, well, if rates are going up, it's not good for the stock market. So the stock market comes back and then sells off. They then wheel out Draghi from the day before, the old Goldman boy, ECB president. And he says, oh, by the way, yesterday, what I meant to say was this. And he went on into a spiel about printing more money until never, basically, carrying on printing until things turn around. Complete moronic thing to do, but that's a different video. So the market then moves lower, and like I say, they wheel out Draghi. Oh, and then he brings the market back. Sorry, got it wrong. And then we see the market moving higher. And because of the range of these price bars, we don't get any signals until later on in the session when we get the first buy signal, which you'll see in a moment. So there you go. And then this is actually filled. And this trade, the market moving up just 30 odd points. It took a moment or two to get going, but eventually broke out, trading up to the 17,750 level. but failing to hold. Now when the market came back through this area here, I took the decision. I've already removed the actual stop loss. I've taken off the scalp as well because it was around this same sort of area. You can see at the moment 30 odd points of profit, and the market's already, having moved in the background a couple of 100 points, decided to take the profits off this trade. And the reason for that, of course, the market's struggling here, and we're just about to go into the quiet time as well. So you'll see that happen, cancelled, and then the market goes into the quiet period until we get into the evening session, when again we see the market starting to move higher. Now what was interesting is the earlier part of the afternoon, if I just wind this back for you. So the market was sideways, and then later on in the session I had a look to see if there was a chance of us actually getting back to the high of Thursday. And this is where I actually came out of the market, but it just goes to show that I could have actually stayed in with this, with the stop, and then let the market move higher. But everything's great in hindsight. So as the market started to move here on more news that was released into the market, we see prices continuing to move higher there. And at this point, even though it's in the quiet part, I actually switched over to the daily chart to have a look and see how things were progressing. And based on 130, the market moved lower, and then after they wheel Draghi out, the market coming back there. So again, I'm having a look and seeing what we've actually got to play with as far as the upside is left for the evening session should the market continue to move higher. Got a straight reversal, so I'm just having a look there, and then what I'm going to do is just to fast forward this now to the trade. There's the actual trade, and sorry, that's not the trade, that was the one that failed. And then eventually we get just after 7:30 we get the trade coming in, the market filling it, and eventually moving up to the scalp, which happened to be the 17,850 level, which tied in with the high from yesterday as well. So let's have a look at the daily chart in a bit more detail. So this is the completion of Friday's trades, and you can see there the market coming back more or less to the high of Thursday there, market driving back up towards those highs. So is it going to break out towards the highs or not? I do not know, but certainly, as I keep saying, they don't want this market to go down. It's a Ponzi scheme, and they are desperate to keep it alive and moving to the upside. This is the all-time high that was reached in May. It is within a shout, and normally we do get the Santa rally, although we are a couple of weeks away from Christmas. The market's got plenty of time to head back to there, and certainly if the interest rate decision is made, the market will rally first before it actually sells off. And again, like I say, it's a different video when you're talking about bond yields and the impact, but again, the other factor to take into consideration as well is how much the interest rate actually increases too. On the advanced version of the software, for those of you that trade this, a slightly different picture. We had the same buy signal, the market coming back. In the earlier part of the session we had two small losing trades there, but again, if you always look at the background, you can see that the market was driving higher. That's why I had a look at the daily chart just to see how things were moving, and again, that's where you see the buy signal coming back in and driving prices back up to the upside as well. Right, so finally we've got the implied volatility dropping sharply down 1%, 12.83, and that's reflected in the chart there as well. Right, so just to summarize, and also keep in mind that we do have 3 days of no economic news, no Fed members being wheeled out to speak. Carney's out, but only on Monday, so we could see the markets trading sideways for the first 3 days of this week. And again, just to add to that, as long as the geopolitical events remain off the radar as well. Right, that's it for me for today. I'll see you in Tuesday's Market Alert. As ever, thank you for your support and also for watching. See you in the next one.